Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 2. And as promised from episode 1, really this entire season is inspired by a lot of your questions and engagements over the last couple of years at this point. And I really just want to mix in a lot of what I call back to basics concepts, especially when it comes to financial education. Yes, we're real estate investors by trade, and yes, we love real estate as our main asset class as a wealth creation vehicle. At the same time, though, what we really see here a lot of the times, myself at Trust Your Talent Academy, is the fact that so many people, they're choosing real estate and real estate investing without really understanding how this asset class actually works, and also more importantly, how the various strategies contribute their ultimate financial goals, which really, in my opinion, is the ultimate financial success when you're clear about what you want to accomplish financially speaking, first of all. Second of all, is the fact that, and I think this is probably, in my opinion, the even more important factor for a lot of us, is the feeling of financial confidence and the feeling of financial happiness, the feeling of not letting your bills or not letting financial matters keep you up at night, or even during the day when you're stressing out about it. Because money, at the end of the day, once you see it for what it truly is, it is really ultimately just a tool and a bunch of numbers. Yes, these days you might still be able to touch coins and print money. At the same time, though, I want to share this with you because over the last few years, I've been traveling quite a lot around the world. And one of the most recent trips was actually to Indonesia. And one of my favorite spots now in the world is Bali, Indonesia. So the island of Bali. And I realized that, well, I'm Canadian. So if you're American or you're from other places, your currencies at the moment are even stronger than the Canadian dollars. Regardless, $1 Canadian equals 11,000 Indonesian rupiah. Okay, so if you do the math, most of us, I'm gonna guess, if you're watching this on a tablet, on a computer, and you may have some sort of headphones in, and you might be even commuting in your own vehicle or in your house or at an office, you got a job that maybe you love or hate, I don't know. It doesn't matter. The point is, when you think about it, many of you watching this right now, you are easily a multi-millionaires based on how much you earn or even based on how much you're currently worth at the moment. Some of you may already be billionaires, okay? That's the thing, because currencies, money, it's just a tool. It's a way for the humans, for us, really, as people, to really conduct trades worldwide more effectively and more efficiently. And so really money means very little, in the sense that if you see it for what it truly is it important? Absolutely, it is important. I'm not saying it is not important. I'm just wanting to help you really slowly open up your mind about what money truly is. And more importantly, as we always say at Trust Your Talent Academy, and this is why I said real estate investing, as great as it is as an investing vehicle to generate multiple sources of income and also long-term wealth, really, it's two completely separate components. And the first part is the asset class that we have all chosen. That is real estate. Investing is how money works. And more importantly, when you combine the two, what we always say is really learning how money works for us through a vehicle that is real estate. So if I sound like a broken record, you've already got that concept. Congratulations, and I appreciate you. If you're still kind of grasping with the idea, make sure you come back and re-watch this episode, or every other episode for that matter, because the whole point is you got to connect the dots over time. And this is also why a lot of people, they tend to ask me at Trust Your Talent, once you've actually had a conversation with myself or one of the strategy coaches, you find out that we actually don't just run weekend trainings. We don't just run 2-hour courses. We don't just run any of these short strategy or topic specific overall trainings when you're serious about becoming an investor and more importantly, a real estate investor. Yes, we do have these live events that are an hour to 2 days in length. These are all what we call the basics as well as introductions. And I just want to be very flat out with everybody, because if you know me, there's nothing to hide here. I'm doing this because I'm super passionate about sharing my experiences and the knowledge that I have acquired over the years through other mentors and other trainings collectively. And so the idea behind all of this is that once you actually get exposed to the Trust Your Talent curriculum and the program options, you will notice that we start at least a 1-year program, or usually most people do what we call 2-year programs. And there are a few options, just depends on what you want to accomplish and where you are at this moment. So what you want to accomplish, as we commonly call it, is your goal, and where you're at is here. It's no different than, let's say you get into your vehicles these days and you plug in the destination in your GPS. It's going to figure out where you are and the most efficient and effective route to get there. And obviously along the way, there's going to be some roadblocks, maybe some detours before you can even get there. And that's the funny thing. Your journey to financial success, to financial freedom, to financial independence, again, we're going to talk about that today, is going to look very similar to that. Too many people, they think it's a straight up line, okay? Even as a commercial airplane that is taking off and reaching its cruising altitude, sometimes it needs to divert a little bit because turbulence, because things that might happen along the way. And it's no different than that, because the way I've learned this, and as one of my earlier mentors said this, is the fact that when most of us are learning the new language of money, or even the language of investing, that's just it. It's a brand new language. I don't know about you, I'm an immigrant myself. I grew up in Asia. I was born and raised in Taiwan, and then I moved to Canada. And culturally, it's completely different. However, from a language standpoint, I learned the ABCs. I learned the very basic stuff when I was still back in Taiwan. At the same time, though, when I first came to Canada, I realized, oh my God, I actually didn't know language. I didn't have a good command of the language, the English language whatsoever. I could say things like, good morning, hello, how are you? What's for dinner? Where's the bathroom? How much is it? Things like that. At the same time, though, it was not until I fully immersed myself within the environment that I was able to become proficient and started speaking English almost like a native. I mean, I'm very proud of the fact that I am bilingual. Actually, I do speak a couple more languages as well altogether. I mean, if you count dialects. However, my main languages now would be Mandarin and English. And that's the result of a full immersion. And that's the way we actually design the programs. However, today, what I really want to get into, as you can see on the board now, is a concept called the Wheel of Wealth. Or the funny thing is, I've been teaching this concept for almost 10 years now at this point worldwide. And I just realized, oh my goodness, it's actually an acronym of WOW. Because I remember when I first learned about this concept, it really flew right over my head. It did take me a few years of being an active real estate investor and having done quite a few deals, leveraging different strategies and in different markets, that I really started to understand how important this is. And this is also why I always want to share this as one of the first things. Okay, so let's get into it now, because every single day I'm committed to spending 15 minutes to half an hour with you. And that also depends on how many questions you may have for me. And thank you so much for your support already on that note. Yesterday was season 3, episode 1, and today's only episode 2. And I've already got so many responses, text and private messages from all of you. And I appreciate that so much, because I understand sometimes, even if you already know this, it's just repetition and repetition, because again, repetition is the mother of all learning. The repetition itself is going to really help you solidify these concepts. And I know it worked the same way for me as well. And really, as a real estate investing trainer and a mentor over the last few years now, there is nothing that makes me feel better as a mentor and a trainer to simply have to confirm your thought process, your mindset about money and about investing and how you find and structure and analyze deals these days. Okay. So with that said, Wheel of Wealth coming back here. It's called a Wheel of Wealth because it starts with a circle, and that's why earlier in my earlier days, one of the trainers that I came across also called it the Circle of Wealth. However, I've been always calling it the Wheel of Wealth simply because of the fact that most people's financial journey in life is a little bumpy. Why? Because that wheel is not well-rounded. And this is also really the central idea in terms of making sure that everybody is financially educated enough, and so that when they are choosing the strategies for them, leveraging real estate as an asset class, as I keep saying, they understand what actually needs to be patched up, because not everybody needs to patch every single income source. Or in this particular case, if you want to kind of take a look at the Wheel of Wealth like a bucket, or looking down onto a bucket, and this is also why I call it 3 different income buckets. Okay, because what's going to feed into the bucket, first thing first, is what we call earned income, or many of us call it active income. Active income, by definition, very much is the fact that when you're actively doing something, you get compensated, or you get paid for the time and the effort that you put in. And so another way of looking at it commonly is you're trading hours for dollars. You're trading hours for dollars. And that's totally okay, because as long as you're trading hours for dollars that bring you meaning and purpose in life, there's nothing wrong with it. I'm very flat out about the fact that me choosing to be a mentor and a trainer in this industry, that's considered an earned income, because when I actually don't do it, it's not really bringing me any income at the moment. Okay. However, the reason why I'm able to do this is because of the fact that I have built enough passive income at this point that it doesn't matter whether or not I get up at 6 in the morning, 9 in the morning, 12 noon, there is constant income stream that flows in that I have created based on my past efforts. Now, I want to be very clear about this, because I think a lot of people, they don't really see the phrase passive income as actually a good thing, also just because of the fact that, yeah, it's not 100% passive. Okay, it's not 100% passive, meaning you don't basically just set it and forget it. You set it up, you start to benefit from it. At the same time, you still gotta maintain it from time to time. Or again, if you're very much like me, being an investor, what that really means, in my opinion, is that you're still constantly building the entire wheel of wealth. Okay, you're still building the entire wheel of wealth. Why? Because it doesn't matter what strategies that you use. The asset class that we are leveraging right now is real estate. And I always say this, real estate, it's like people. People, we age, we get older. As much as we may not like it, the truth of the matter is, statistically speaking, the older we get, the more problems we encounter, typically health issues. And so with that said, the same thing happens with this asset class that we all like and enjoy, which is real estate. At the same time, though, what that also means is the performance goes down over time, because your expenses will increase. And so we're going to touch on that when we are going over the income properties module and discussions later on. Or if you don't want to wait, there are already a few episodes back in season 2 that you can take a look at. And I put everything down in the event here as well. And if you don't see it, don't worry, I'm going to leave it in the comment section after this episode is done. Okay, so you'll be able to go back and watch some of the income properties episodes from previous seasons. At the same time, though, I want to make sure that everybody understands that passive, in my opinion, really means that you spend very little to no efforts afterwards to maintain it. So maintenance is just as important because, again, one of the main reasons why I wanted to start season 3 is simply because of the fact that so many people got into the real estate investing world in the last 2 to 5 years. And in the last 2 to 5 years, the markets were massively different. Yes, we sort of went through a bit of a dip when lockdown started happening because of the pandemic. At the same time, though, the markets worldwide kind of went bonkers a little bit, meaning it went up in terms of value. And so as one of my investor friends like to joke, and he's a professional investor, when the times are good, my 14-year-old can invest and make some money out of it. It doesn't take any knowledge, doesn't take any training, doesn't take any experience, doesn't take any wisdom to make money when the market is good. However, right now, I'm never going to, clickbait you, or I don't know how to call it these days. Like I said, this is as live as it gets. I plan the episodes, but I don't script anything. So whatever comes out, comes out. It's the fact that I will never say why now is the best time to buy real estate or to invest in real estate, rather. Yesterday, I talked about the difference between buyers versus investors. If you didn't catch that, make sure you go back to it. Now, the idea behind this really is the fact that it's always a good time to invest in real estate, in my biased opinion. Why? Because I have spent the last 13 years training myself nonstop, and I'm still an active investor. I am still acquiring properties. I'm still updating my portfolio as we go to make sure that my money is constantly working as hard as it can be for me. And that sometimes negates a lot of people's idea in terms of choosing real estate as their main asset class to create income streams and long-term wealth, simply because of the fact that they think it's a long-term buy and hold. And this is why one of the most popularized strategies over the last 2-3 years, I don't know why, maybe because of COVID, is multifamily investing. While I love multifamily investing, I firmly believe that it is not for everybody. And the thing is, I'm not singling out multifamily investing as a strategy that's not for everybody. I could say the same thing for every other strategy as well. It could be lease options, it could be creative finance, it could be private lending, it could be commercial properties, it could be industrial properties, it could be development, large or small scales, doesn't matter, okay? The thing is, do you understand, do you know your asset class well enough that you are able to work it to your advantage? However, above all that, do you have the financial education? Now, one of my favorite money gurus of all time is Robert Kiyosaki. Surprise, surprise. He's made famous, in case you actually don't know him. That's the funny thing, because some of us, we live in this world, and the name Robert Kiyosaki or the book, Rich Dad Poor Dad, it seems like a no-brainer. Everybody knows it. However, having traveled around the world, a lot of the times when I get into conversations with other people from other countries, other parts of the world, even when they're North Americans, when the conversation comes out about what we do, I always ask them, do you know the book Rich Dad Poor Dad or the author Robert Kiyosaki? And 9 out of 10 times, funny enough, 9 out of 10 times, they would say, oh, no, never heard of the book or the author. And so I don't want to make that general assumption to say that everybody knows that book. However, coming back here, I remember him saying, when people ask him, is real estate a good investment? His answer would be, I don't know. Do you know real estate enough? Are you educated enough to make it a good investment for you? And then people would ask him, is stock or stocks a good investment? He would say, I don't know. Are you educated enough so that stocks are a good investment for you? And then they would ask, well, we know you really like investing in gold and silver. Are those good investments? They must be, because you do it. And then his answer would be, well, I think you got the point. His answer is, I don't know. Are you educated enough to make gold and silver or precious metals a good investment for yourself? And that's just it. And this is why the underlying theme is financial education through real estate investing. And I know some of you are readers, and I've tagged some of my articles as well, because this is really truly what I believe in, is the financial education side of things because I don't know about you, I was never brought up with financial education. A lot of traditional schooling, yes. However, when it comes to money, had to figure it out, had to learn, had to get mentors, had to get coaches, had to get trained to completely rewire my money blueprint and programming so that I can actually break the mold and do better than my predecessors, my parents, and the general public and the society. So if that's something that you want for yourself, stick with me, please. Because aside from real estate investing, again, really what I'm truly hoping to do with everybody is to make sure that you're financially elevated enough so that whatever investment vehicle you choose to go into, it works for you. Because even when we're coming back to the wheel of wealth now, the last income bucket is what we would call the equity income bucket, or some people call it portfolio. Okay. And so the idea behind this is, if you think about it, all the different asset classes, there are actually different strategies that feed into either one or all three income buckets. So because season 3 is financial education through real estate investing, we're also going to go into looking at strategies that'll feed into the different income buckets. Some of you that have been day traders for a while, you might actually know more than one strategies to feed into your income buckets that a lot of the people don't know out there. And some of you actually already know that I've been learning how to trade in the last for the last 2.5 years now. So throughout the entire season, I'll sprinkle some of those and my learnings and my earnings, my experiences, my losses with you, because again, I want to be completely upfront and transparent with you. Even though I train, I mentor, I've been actively investing for 13 years and been leveraging real estate for almost 20 years, as mentioned yesterday, or in episode 1, it's the fact that I still make mistakes. And that's the thing. We always say this: investing inherently has risks. There is no such thing as risk-free completely. So simply what we're doing is to educate ourselves enough financially and learn the asset class well enough so that we are constantly taking calculated risks when we are deciding on going into a deal or not. And that's really where the education comes in. Okay, so with that said, these are the 3 income buckets that compose and add up to the wheel of wealth. I'm going to elaborate on this a little bit more as the week progresses. However, the next thing I really want to go into is financial independence versus financial freedom. Again, there are a lot of catchphrases out there, and they shouldn't be catchphrases because to me, they really matter in the sense that if you're somebody that's already a little stressed out or a lot stressed out about the subject of money, and you are already wanting to do a little bit better, whether that is, you know what, you're currently feeling you're trapped in a dead-end job, or you simply do not like what you're doing. Again, I enjoy what I did as a job before. However, the politics, the office politics and the backstabbing, they were just killing me mentally, emotionally, on a very soul level. But we're getting too far now. The point is, when it comes to learning about money, the idea is to make sure that you get enough tools to help you solve the problems that you have. And these problems typically are money-related problems. So as I mentioned earlier, those 2 things, or maybe you've made some bad decisions leading up to this point in your life. You're in a lot of bad debt. Remember, there are good debts versus bad debts, which we're going to go into as well, because that is such a key and crucial concept when understanding how debt works. And when you can leverage debt to your advantage, that is where you're going to come out apart from the rest of the population and the rest of the world and how they see money and debt. Because again, if you're North American like me now, I live in Canada, my American friends, you understand that our currencies are no longer backed by any sort of asset or any sort of hard asset in this case, which means debt has effectively become the new wealth. Okay, I know this is a bit of a leap for some of you. I want to say that again. Debt has become the new wealth. More importantly, the complete sentence is understanding how to leverage debt, has now become the new way to create wealth. That's really the whole sentence. Very much like money is not the root of all evil, it's the greed for money is the root of all evil. Context also matters. And this is why sometimes when I say 15 minutes to 30 minutes every episode, it's a little challenging at times, simply because of the fact that I want to make sure that I'm not losing any points, and so that I don't lose you and the dots connect as the episodes progress, so that really the foundation is there by the time you get into the advanced trainings. Okay, so with that said, when it comes to financial independence, the way I look at it and the way we see it at Treasure Talent Academy very much is the fact that you no longer rely on anybody. For most of us, that means you don't need a job anymore, or maybe you are a small business owner, maybe you're self-employed, whatever profession that you're in. You basically do not have to rely on anybody else to give you paychecks to survive. So whether you're pulling 1 job, 2 jobs, 3 jobs these days, I mean, I applaud you on some level. However, it can be easier and it can be simpler, because I remember once upon a time, I was also pulling 2 jobs at the same time. And all I realized after a while is that I was constantly trading hours for dollars, which means there is a ceiling in terms of how much I could earn, regardless of whether or not I was getting raises. And this is why learning how to feed the other 2 income buckets are so important. And so coming back to financial independence, the way I look at it is the fact that when you have incomes coming in from active and passive, okay? Active and passive in this case through real estate investing strategies, then you are able to cover, using the income coming in from implementing and executing those strategies, you're able to cover your basic expenses. Then you are able to declare financial independence, okay? I'm going to say that again. This means you now no longer require going to a job. So that job could be a 9-to-5 thing for many of us. Or again, if you were like me before, I was working basically 70, 80 hours a week on average, because weekends, it was travel time, it was work time, it was catch-up time with work. And on a daily basis, especially when you have to commute, even if work starts at 9 o'clock, a lot of the times you're probably starting at about 8 o'clock. Get ready, pack everything up, get into traffic. And then when work is done, most of the times it might not even finish on time at 5 o'clock. You get things done 5:30, 6 o'clock, you battle traffic through. Maybe you have to bring work home sometimes too. I don't know. Everybody's a little different. However, I'm just sharing with you the background that I came from. And that's why I was so desperately looking for something else so that I could feel like I was getting ahead in life and not just sacrificing my time, my life for tasks. Okay. And so we go into jobs because they pay us enough to pay our bills, and a lot of times giving us a little bit of extra so that we can have a bit of lifestyle. So we're going to talk about that a little bit more too in the episodes to come. However, I just want to make sure that you understand that declaring financial independence means that you have real estate investing strategies that you have executed, meaning likely you've acquired properties either with your own resources or with OPM, other people's money, meaning you might be leveraging some creative financing strategies to acquire those to help you get started. And as a result, you're able to cover all of your basic expenses so that you don't have to get up to go to work every day. You are able to choose to work on scaling, building, growing your own portfolio and the income streams within, okay? Now, financial freedom. The main difference between those two is the fact that your financial freedom will come from your passive income bucket, meaning you have enough income streams added up in your passive income bucket That will pay for all of your basic expenses on a monthly basis, because that's the world we live in now. Every single month, sometimes bi-weekly even, we have bills that come due. That could be your leases, your rents, your mortgage payments, your water bills, your utilities, internet, cell phone. You gotta eat. So grocery bills, maybe car payments, maybe bus passes, whatever it may be that add up to your survivals on a day-to-day basis. There are bills that come due. And this is why so many times, the common thing that we all see would be most people, if they are savvy enough or diligent enough, I don't like the word savvy to be honest, diligent enough with managing their money, is the fact that they would have active income and they'll choose to live frugally, and then whatever extra that they have gets put into what we call the portfolio income bucket or the equity income. So that looks like maybe into savings accounts, maybe into retirement accounts. Maybe, again, if you're like us, Canadians, there is something called a TFSA, tax-free savings account. You can put that money into another type of savings account so that the capital gains are not taxed. Or you can put it into stocks, you can put it into bonds and yields, and maybe even real estate. That's why it's equity and portfolio. Okay, I'm looking at where it is on the camera right now with everyone. And so with that said, I want to make sure that everybody is very clear about the fact that financial freedom, being able to declare financial freedom, means that you have enough passive income now to cover all of your basic expenses. And being able to declare financial independence means that you are still actively pursuing growing your income streams with both active and passive income streams. Now, there is not one thing that's better than the other. It really just comes down to what you want. And so this is really something that we will go over as the time goes on. And I know this is a bit of a longer episode already, so I want to make sure that this is now in your brains and we're going to elaborate on it. And so any questions, any comments about this, feel free to drop it in the comments section or private message me. I know many times, so many of you are very shy, and sometimes it's not even shyness, because I totally understand. The subject of money makes a lot of people uncomfortable. And so you may have a personal situation that you want to ask about. And as I mentioned, I will never share what your name is. However, sometimes when I feel like there's a teachable moment, I will share the scenario, and hopefully we can leverage that so that everybody can benefit from it. With that said, I'm also going to share with you the fact that there is going to be an Eventbrite link in the comments section later on after this live stream is done, so that you are able to participate in other introductory and basic seminars and courses and trainings that we're putting out there, so that you can start to treat this as a building block for yourself. So many people, they just go into taking one single strategy and they think that that's more than enough. And they don't even know how to build the proper team that fits their financial goals. All they know is, I've chosen a strategy, I've chosen real estate, and let's go. And so while there is certain merits in that kind of approach, I will share this with you. In the last 10, 20 years now, I have never seen that approach serve anybody well financially in the short term and the long term. And so again, stick with me, stick with us. We're going to help you build up what you need to know so that when you're actually taking the proper actions, you are not only growing, you're also protecting what you've invested in and grown. And also you can continue to build upon it and potentially passing it down to your future generations. So with that said, thank you so very much for joining me today on the second episode of season 3 of My Daily Dose with Tim. Live well, everybody, and I will see you back here next time.